Good afternoon. This is Brian Shannon from AlphaTrends.net. Today is Monday, the 20th of August, 2012, and the market's closed here. We had a mixed session, kind of quiet. It did start out a little bit on the soft side as the market sold off down to daily S2 and then did recover throughout the session here back above the volume-weighted average price. It didn't break below the low of the day since there, but it did grind back higher to basically unchanged. Well, we were up a penny. So today's low is going to be important, right at about 141.50, we'll call it. That's where we have that rising 5-day moving average. And the path of least resistance obviously remains higher. We do have, we were down. This is a higher close than we have seen earlier in this year after seeing that happen actually last week. And the weekly time frame, we have higher highs and higher lows still. So the market, the uptrend remains intact. We're innocent until proven guilty above a rising 5-day moving average. And now it will remain that way in the intermediate term as long as we remain above 141.50. The NASDAQ was up 10 cents here, and this market continues to grind higher up towards highs and possibly even at a closing high. I didn't even check that, so we can check that together. But these highs back here on a closing basis, it closed at 68.21. It looks like was the previous 68.25. So we did see a higher high in here. Actually, Friday we were up at 68.32. So the path of least resistance remains higher. We have multiple year highs in all of these markets, and just a very impressive recovery after it broke beyond that initial resistance here, as we know, a couple weeks back about a month or so ago at about $65 a share. We've paused at prior levels that were resistance that we were cautiously looking at as potential for resistance. But once again, we only know in hindsight what resistance is. You can't just simply sell short because it's at a prior level where it found resistance. That obviously has cost people a lot of money here, and the market continues to march higher. Right, the beginning of this week, we're going to be keeping an eye on about $68 a share. If we remain above that, then intermediate term remain innocent till proven guilty. It's going to take a lot to damage these daily uptrends, but we do know that they can unravel pretty quickly at times too. So always keep some caution up and a strong defense, but embrace the current trend, which is still higher. The Russell 2000. Now on Friday Thursday actually, we had broken what I've been defining as this inverted head and shoulders pattern here in this neckline. We spoke about this last week, and I said it's kind of this band of resistance here that we've seen before. Now, some people are taking a look at the head and shoulders pattern, inverted head and shoulders pattern like this, and I don't think that's the proper way to look at it. They often at times do have a slope to them. We are testing this 82 level, which was a little bit of prior resistance, and that's good to see. As we know, the last test of that 80 level, we were looking at it as extended there. We wanted to see it pull back a little bit. We got that pull back. Now we're moving higher once again as the market broke last Thursday back above that resistance after testing the rising 5-day moving average. So early this week, first couple days, we're going to be looking at 80.75 to 81 as our more important level of support, that if we remain above that, intermediate term remains innocent until proven guilty. We've got a rising 5-day moving average. And the daily chart, we're consolidating a little bit underneath this prior level at 82. So perhaps we're going to consolidate here a little bit before blasting higher. But again, the path of least resistance on the daily time frame, we've got a rising 10, 20, and 50-day moving average. We've got a rising 5-day moving average. So unless we're back below 81 rather, then this intermediate term environment remains innocent until proven guilty. The semiconductors came down they were down 8 pennies here today and down towards the low end of recent support. The bigger level, as we know, that we're going to stay focused on, that this market wants to stay above, is probably going to coincide with this rising 20-day moving average, and that should occur in at about $32.85 up to about $33.10. That is our more important band of support that we want to keep an eye on. We do see that the 5-day moving average is kind of flattened out and we close below it. We can see that a little bit better on the 5-day chart. So this 30 33.15. I'd say set an alert near about that tomorrow. If we break down below, actually, I'm sorry, $33.30. If we break below that tomorrow, then possibly we're going to see a little bit deeper pullback that would get us to that 20-day moving average, and that would, I think, erode the confidence of the market overall just a little bit for at least a couple days. It's just, I think, more of a correction, not really something worth going in and trying to aggressively short. These markets are still, they look good on the longer term basis. That we've gone beyond this important level in the semiconductors, and this has been a fulcrum point for the last couple of years, near about that 32.5, 33. We've got this range kind of tightening actually, so we're within, I guess, a bigger ascending or symmetrical triangle. I wouldn't read too much into that pattern though, as it's such a longer term pattern. And so if we break below 33.20 tomorrow, then let's kind of be a little bit defensive and look for a market maybe to pull back towards that 20-day moving average. Financials were up 4 pennies today, and they continue to hone in on what we were looking for at about 15 and a quarter. We've seen that 15, the consolidation near 15, 14.90 to 15, that this market has been just kind of grinding higher, and some people have been trying to catch it on the short side. But again, with a rising 5-day moving average, it doesn't make sense. So right now we've got down to 15 to let's just 14.95 to 15.05. That's probably our more important band of support that we want to keep an eye on. So these markets all remain rather healthy. It was interesting today that silver broke out beyond some resistance here recently, and you can see that 50-day moving average is flattened out. The 10 and 20 are kind of curling up a little bit. But when we look at a longer term chart, we're at a declining 100-day moving average. So I wouldn't get too excited about a precious market, metals bull market. But it is worth noting that we broke a little bit of resistance in silver, and perhaps that's going to spill over into gold, as that's recovered a little bit in here recently as well. We've kind of been looking at this 159-ish level, saying, basically 158.5 to 159 is the more important resistance. Now, on this daily time frame, you can see that we have been showing higher lows, and we're getting more repeated tests of that resistance. So, for a scalp, if you're into that, then I think gold could be heading back up towards that 159 level, and perhaps the declining 200-day moving average. But I don't think we're ready to see a major turnaround that is pushed back higher in gold. So that's just something to keep an eye on, because a lot of people have been talking about it. And similarly, the bonds have really pulled back a lot deeper than I thought they would. Originally, I thought maybe they were going to find some support at the 50-day moving average then in here. Well, last week, obviously, it did continue lower, so I wanted to follow up on that. And right now, the thing is, when we're looking for an alignment of trends, we look at that daily time frame and we say, hey, it could be a pullback. But again, as long as we have a declining 5-day moving average, the intermediate term trend says guilty till proven innocent. And that's been the message since this market began pulling back at about 132. That since that 132 level, from an intermediate term standpoint, the sellers have remained in control with that declining 5-day moving average. And as is often the case with a declining 5-day moving average, we do see that those pullbacks continue to pull back. Subscribers, we do have a webinar this evening. Don't forget the time change. That is at 7 p.m. Eastern. And I will talk to you then. Thanks for tuning in.